You're looking at live pictures from Beijing. China is marking 80 years since the end of World War II with a show of power, an elaborate military parade showcasing new weapons and a bold display of its growing diplomatic influence. You're watching The China Show. I'm Annabelle Droulers, and we're counting down as well to the market opens in Hong Kong, Shenzhen and Shanghai.
And I'm Yvonne Meng, coming to you live from the BNP Paribas Global Markets APAC conference in Hong Kong. And let's just really talk about what's in store here, Belle. We're expected to hear from President Xi at any moment now, really. And it's a really crucial moment, coming back out of the SCO and really showing his diplomatic sort of clout to now this military parade and showing Beijing's capabilities in the military side of things. You know, there's been social media that's been rampant, and military experts really looking at the satellite images of late of what sort of tech, what sort of hardware China is going to showcase today.
That's right. I mean, there could be a lot of different weaponry and equipment in the parade, perhaps being seen for the first time. The big question as well, what are the capabilities and what sort of show of force will that be, not just against the US, but also as it, of course, attempts to even recruit new buyers for its equipment as well. But let's cross to Beijing now, because we have our chief North Asia correspondent, Stephen Engel, standing by at the parade for us. So, Steve, set the scene. What exactly is going on the ground?
Yeah, so I'm in the north stands, just slightly askew from the Mao painting at the Tiananmen Gate across the street, of course, from Tiananmen Square. And we're getting the several gun salute right now, as we've had a number of different patriotic songs being sung just after Xi Jinping and Vladimir Putin and Kim Jong-un and other dignitaries, heads of state who are invited and are here, arrived at the top of the wall there, entering the Forbidden City. You're seeing right now the continuing gun salute, followed by the marching of the soldiers. We're likely to get, again, a speech from Xi Jinping in the coming minutes. In 2015, the last time they held such a parade, where I was here as well, Xi announced that big restructuring of the People's Liberation Army, and we'll be listening to any kind of more changes that he might announce today, in addition to, of course, marking the 80th anniversary of the end of World War II and showing the world that China, along with the Soviet Union / Russia, also contributed to the victory over the Japanese and the fascists in Europe. So it's a multi-pronged different parade from a historical perspective, but also a way for Xi Jinping to show the modern military that they have built and going forward that they are a diplomatic force to be reckoned with following the SCO in Tianjin.
Steve, in terms of the weaponry, tell us, you know, obviously there's been satellite images during the rehearsals, and people are really kind of looking at what may be showcased here. Just walk us what we might be actually seeing today.
Well, China definitely has been spending heavily to modernize its military. It's also now not only just for the domestic military, but it's the fourth largest arms exporter. It's a prolific developer of hypersonic missiles like the DF-17 with its hypersonic glide vehicle. That will likely, we're hearing from sources that could be on display today. Also, the ICBMs like the Dongfeng or the DF-41, the solid fuel ICBM with a 15,000-kilometer range that can hit just about any strategic target across the Pacific. The West Coast is about half that distance away. So, again, it's a show of force and a show of modernity here in Beijing. Cruise missiles we'll be seeing, like the YJ-15, the YJ-17, the YJ-19 is the first hypersonic cruise missile that will be on display, and the latest one is the YJ-21. And probably what everybody is looking for are the attack and reconnaissance drones, loyal wingmen as they're called, designed to team up with manned fighters. This J-11, or Sharp Sword, for strike missions. It teams up with the J-28 stealth fighters. So that's something that is likely to be on display here as well.
Yeah, absolutely. I mean, China's drone capabilities are really second to none on the global stage. You mentioned that 2015 announcement from Xi around that restructuring of the army, the reduction of the troops, but also, I mean, the purge has continued in recent years. So what can we expect in terms of the personnel who will be there today and perhaps who will be missing on the stage?
Well, the person who will most likely be missing, I didn't have a chance to see the footage of the cameras panning down the aisle there of all the leaders and whether He Weidong was in attendance. I'm guessing he probably was not. He's the vice chair of the Central Military Commission. He has been out of public view for quite some time. No official reason given yet for his extended absence. He may indeed, though, be the highest casualty of this expanding military corruption probe. Xi has already ousted about a fifth of the generals that he appointed over the last 2.5 terms in office. Keep in mind, his predecessors, Hu Jintao and Jiang Zemin, they didn't remove any of their generals during their 2 terms in office. So it's an interesting, development as Xi Jinping really relies on the military to project power and to project, the modern state of the Chinese military and economy. You know, it was Mao Zedong who said political power grows out of the barrel of a gun, and he's been using that power to bring discipline to the ranks. Li Shangfu was removed as defense minister. Wei Fenghe was removed as defense minister. Miao Hua was the senior admiral for the PLA Navy. He has been removed. The rocket force commander, Li Yuchao, he has been replaced. So he's not, he's quite serious about discipline within the PLA.
Steve, the visuals have been quite remarkable, and it really has been a very sort of interesting sort of week when it comes to diplomacy, right? Whether you see what's happened in SCO with Putin, Modi, and Xi, speaking together, to now in this red carpet that's been laid out for Kim Jong-un, sitting next to President Xi and Vladimir Putin. Walk us through the optics here and really the message that is sending to the world, particularly the Trump administration.
Well, the message is that China has built a coalition of powerful economies and powerful militaries that can counter as well the global world order led by the United States. That's the message, but that is yet to be seen. Xi Jinping is about to be speaking, and I'm being told to be quiet now.
All right.
So we have Stephen Engel, our Chief North Asia correspondent, on the ground there in Beijing for us. We are awaiting President Xi to speak, of course, this military parade, the big focus on it. Yvonne, we were just talking about the colourful images that we're seeing here today, but undoubtedly this is a huge show of force for China on the global stage. This is the event that marks the 80th anniversary of the end of World War II in China. You can see President Xi at the podium here. Let's listen in.
Your Excellencies, heads of state and government, and representatives of international organizations, distinguished guests, all officers and soldiers participating in the parade, comrades and friends. Today, we gather here to solemnly commemorate the 80th anniversary of the victory of the Chinese People's War of Resistance against the Japanese aggression and the World Anti-Fascist War. It is an occasion for us to remember history, honor fallen heroes, cherish peace, and create a better future. On behalf of the Central Committee of the Communist Party of China, the National People's Congress, the State Council, the National Committee of the Chinese People's Political Consultative Conference, and the Central Military Commission, I would like to pay high tribute to our veteran soldiers and comrades, patriots, and officers who fought in the war of resistance against Japanese aggression. and to the Chinese nationals from home and abroad who made important contributions to our victory.
致以崇高敬意，向支援
I would also like to express
和帮助
my sincere
中
thanks
国人民
to
抵抗侵略的外国政
foreign
府
governments
和国际
and
友
friends
人，
that supported and
表示衷心
assisted the
感谢
Chinese people in resisting aggression.
向参加今天大会的
I
各国
also
来
extend
宾
a warm welcome
表
to
示
our guests
热烈
from
欢迎
around the world who are with us today.
同志们、朋友，
Comrades and friends,
中国人民抗日战争
the Chinese people's war of resistance against the Japanese aggression was the Great War fought with tenacity
在
and
中国
valor
共产党倡导建立的
under the banner of the
抗日民族统一
National
战线
United
旗帜
Front
下
against Japanese aggression established at the initiative of the Communist Party of China, the Chinese people stood up to fight the formidable enemy with an iron will
取得
and formed a great war with flesh and blood to defend the nation and ultimately achieved the first complete victory in resisting foreign aggression in modern times.
中国人民抗日战争
The Chinese people's war of resistance against the Japanese aggression was an important part of the world anti-fascist war.
中国人民以巨大的
With huge
民族
national
牺牲
sacrifice, the Chinese people
为拯救
made
人类
major
文明
contributions
保
to
卫
saving
世界
human
和平
civilization and
做出
safeguarding
了
world
重大
peace.
贡献。历史警示我们，
History cautions us
人类命运休
that
戚与共，
humanity rises and falls together
各个国家、各个民族
only
只有平等
when
相
all
待
countries and nations
和睦相处
treat each other
守
as
望
equals,
相助，
coexist in
才
peace
能维
and
护
support
共
each
同
other,
安全，
can we uphold common
消灭
security,
战争根源，
eradicate the root cause of
不
war,
让历史悲
and
剧
prevent
重演。
the reoccurrence of historical tragedies.
同志们、朋友们，
Comrades and friends,
中华民族是不畏强暴
the，Chinese nation is the great nation that is never intimidated by any bullies
当年
and always values
面对
independence
正
and
义与
forges
邪
ahead.
恶，光明
In the
与
past,
黑
when
暗，
faced with critical struggles
进
between
步与
good and
反动
evil,
的
light and
生死
darkness,
较量，
progress and reaction, the Chinese
中
people
国人民同仇敌
rallied
忾，
together to defy
奋起
the
反
enemy.
抗，为国家生存而战，
They fought for the
为
survival
民
of the
族复
country,
兴而战，
for the rejuvenation of the
为
Chinese
人类正
nation,
义而
and
战。
for justice of the whole humanity.
今天，人类又面临
Today,
和平还是战争，
humanity again has to choose
对话
between
还
peace
是对
and
抗，
war, dialogue
共
and
赢才是
confrontation,
零和的抉择。
win-win cooperation and zero-sum game.
中国人民坚定站在历史正
The
确
Chinese
一边，
people firmly stand
站
on
在
the right
人类
side
文
of
明
history
进步
and the
一边，
progress of human civilization.
坚持走和平发展道
We
路，
will remain committed to the path
与
of
各国
peaceful
人民
development
携手
and
构
join
建
hands with all
人类
peoples
命
around the
运共
world
同体。
in building a community with a shared future for humanity.
中国人民解放军
The Chinese People's Liberation
始终是
Army has been
党和人
and
民
will always be
完全可以
the
信赖
heroic
的
armed
英
forces
雄
that the
部队。
party and the people can fully trust
全军
and
将
rely
士
on.
要忠实履行神圣
All
职
service
责，
members should
加快
faithfully
建设
perform their
世界
sacred
一
duties,
流军队，
speed up the building of a
坚决
world-class
维护
military,
国家主权
and firmly safeguard
统一
China's sovereignty,
领土完
unity,
整，
and territorial integrity.
为实现中华民族伟大
All
复兴
service members should
提
provide
供战略支
strategic
撑，
support for the great rejuvenation of the
为世界
Chinese
和
nation
平与发
and make
展
greater
做
contributions
出
to the
更大
peace
贡
and
献。
development of the world. History carries the legacy of the past and inspires the future. On a new journey in a new era, the Chinese people of all ethnic groups should, under the strong leadership of the Communist Party of China, follow Marxism, Leninism, Mao Zedong thought, Deng Xiaoping theory, the theory of three represents, and the scientific outlook on development, and fully implement the thoughts on socialism with Chinese characteristics for the new era. We should stay firmly on the path of socialism with Chinese characteristics and carry forward the great spirit of the war of resistance. We should press ahead with enterprise and resolve, and advance in unity the cause of building China into a great country on all fronts and realizing great national rejuvenation through China's modernization. The great rejuvenation of the Chinese nation is irresistible. The noble cause of peace and development of humanity will prevail. The military parade now begins. Markers in position.
The parade guards mark positions and boundaries at the parade ground. 60 soldiers will line up in front of the eastern and western ornament columns on the Tiananmen Square.
Well, that was President Xi there speaking as the military parade gets underway this morning. This is the event that marks the end, or the 80th anniversary of the end of World War II. We have the military parade that has just begun this morning following that speech from President Xi. Very big focus on the weaponry at this event. Many of it could be seen for the first time, and the big question on the capabilities of that weaponry as well, including hypersonic missiles, for instance, laser beams, anti-satellite capabilities. We'll have much more coverage on that. Subscribers, of course, can turn to their terminal. T-Live Go is the function for the latest updates, plus commentary, analysis from our expert editors. Now, just in the last few minutes as well, we've had President Trump. He's also wished President Xi a great and lasting day of celebration. So that is President Xi, or President Trump rather, posting a message to President Xi, as we said, this military parade. In terms of the markets this morning, let's just take a look at what's happening here with pre-market. We see a little bit of upside so far across the board. I mean, not really expecting perhaps too much downside pressure today, given this major focus on what happens with the parade. We do see, of course, China preferring to see markets at least trading sideways, if not higher, around these major events in the country. But that is the state of play there. Some of the big themes we're tracking, of course, is wealthier Chinese people also getting back in to so-called snowball derivatives. So riskier bets also coming into markets as well. Asia ex-China, let's take a look at that this morning as well, because there's been a couple of different themes that we're tracking this morning. Firstly, we can take a look at TSMC there. You can see just come online in the last 20 minutes or so, but TSMC is a little bit in the red this morning, off 1.3%. The story here, of course, is that the US has revoked its ability to send semiconductor making equipment to its site in Nanjing. This is in mainland China, of course, not seen as having such a big impact on TSMC. The other things that we're tracking, it's really that big focus on what's happening in global bonds this morning. We're continuing to see these moves. The Treasury, for instance, 30-year one, close to that 5% mark. So the global bond round is the major theme for market participants this morning. Yvonne as well.
Yeah, I mean, when you talk about that U.S. 30-year yield approaching or getting close to 5%, it really started in Europe, right? What we saw in the UK with the pound dropping, and now you're seeing now in France too, where spreads with German bonds are basically the widest we've seen all year now. It does leave, once again, concerns about the fiscal side of things globally around the world as well, and we're seeing that now hit the Asia session once again here today. And timely enough, right? BNP Paribas Global Markets APAC conference is underway. We're live here at the Four Seasons Hotel here in Hong Kong, and really is bringing together some of the leading investors, policymakers, and corporate executives. And the big theme here is make Europe great again. So perfect time to talk to Brian McCappin, APAC Deputy Head of Global Markets at BNP Paribas. He joins us here to kick off, of course, this conference, and very timely one, Brian. It's really great to have you back as well. I take a look at what's going on in the bond market, and there seems to be a lot of questions about the vigilantes are back, and once again, concerns in the UK and France. How are you kind of navigating this sort of bond environment now?
Sure, Yvonne, thank you. Great to have you here with us. It's what we're doing here today. We've got many, many clients who've joined us to talk about that very topic, and behind me, Bruno Le Maire is talking earnestly with Luigi, who was with you yesterday. We're constructive on Europe. We find the fundamentals positive, benign, steady growth, interest rates that have come down dramatically, but we're really encouraged by client interest and client flows, sort of what you see going on behind us. It's clear that clients all over the world are looking for alternatives for US assets, US bonds, and so that de-dollarization process is lending a lot of support as clients look for things to buy. And sure, yields are rising, and there's a little instability in the stock market. We've had some political instability in France, obviously.
Yeah.
But that's not deterring the interest, and we see it day to day. And I think clients are going to look through that, and they're going to see steady, strong value, and they're going to come in and start to buy assets. And one interesting point to note is, I was looking at some of our flow data.
Yeah.
This year, allocations to global hedge funds have been overwhelmingly in favor of European strategies. And we can see that in the stock market, it's up 20%, right?
Better than the US right now, yeah.
It is. So it's performed well despite these worries, and we think it's going to carry on performing well.
If the US 30-year yield hits 5%, if it does, what does that signal to the world, to bond investors out there and to markets, you think?
Bond investors are worried about political instability. They're worried about the indebtedness, obviously, of large central banks, global economies. That's true of the US, it's true of Europe, it's true in Japan.
Yeah.
And of course, in some of those markets, interest rates look set to fall sharply. For example, maybe the US. We'll see yield curves steepen further. But again, what we see on the ground is clients looking for value. And when I come back to that Europe story, it's overwhelming. And so we play a big role in helping them find those pockets of value. It's what we're talking about here today.
Where are those pockets of value now? I mean, people talk about defense stocks, for example, but it looks like it's beyond that, this theme that you guys are really exploring now.
Yeah, I think defense stocks and the fiscal boost that Europe's enjoying has probably yet to play through. And so there'll be continued performance in the European equity markets as that takes hold. And of course, the bond market is now offering yields, not just in OATs or bonds, but also in the peripherals, is offering yields that clients are interested in. And I think we're going to see that continue to support the market as we go forward.
As a European lender, I'm guessing you are kind of benefiting from these kind of geopolitical crosswinds here and what's happening in the U.S. as well. I'm just wondering, in terms of a business perspective, does it change the strategy overall on where you deploy money, people, and the like now?
We're always guided by the client interest. We're sitting here in Asia. The China story is very interesting. We're guided by that. And we play a role not just bringing Europe to clients in the region, but we also bring, for example, China to our clients outside of the region. And there are many, many reasons to be very, very constructive about the China story at the moment, which of course leads us to invest a little more, spend a little more time, capital, whatever you want to call it, in our businesses here. And that's a topic we're going to talk about later today with Dr. Lee. And I'm sure it's going to be a very lively session.
I think it was a year ago, you were speaking to my colleague Steve about, it's a gradual and cautious expansion into mainland. Otherwise, you have multiple JVs there. Has that changed, that sentiment, given what we're seeing in equity markets and this resurgence in animal spirits in the mainland now?
We're pretty happy with the strategy. You're right, Stephen did ask us about that and how we were hiring. And as I explained, we're a European bank, we're not an American bank, so we do things cautiously. But cautiously has proved to be quite solid, and we've increased our presence, we've increased our footprint, our share of market, the range of products that we're offering clients. And we've been fortunate that the story, the backdrop, the China story, as you've just referred to, has continued to gain momentum. There are many, many reasons to believe that that's going to carry on, and we're going to carry on leaning into that to serve the clients that we talk to out here in the coming months. But we do feel quite constructive about China at the moment.
There's a lot of talk about comparing this rally to 2015. There's this equity rally that seems to be at odds with what's going on the ground economically and the fundamentals as well. I mean, what is sort of the message that in the client conversations that you're having now with people that are maybe getting a little bit more interested in investing in China?
It's a great question, and there are a number of key things. So in no particular order, first of all, liquidity. Savings onshore, as you know, have recovered dramatically in the last 18 months. It's a great component of the market. Southbound flows, as a result of that, are very, very robust. Hong Kong, still liquidity, but the price of money. Interest rates in Hong Kong have been extremely low. That's encouraging investment opportunities. So liquidity is a big one. I think the second one is the lack of alternatives. If you're investing in the region, China government bonds are hovering around 1.6%. Equities look pretty good. The third is returns, and those returns can be capital gain, they can be dividends, and we see two different stories there. On the mainland, it's a little bit more of the dividend income story, where we're seeing broader China A performance. Here in Hong Kong, it's been tech story, so it's capital gains. So both perspectives seem to be very, very constructive, I think.
Do you still see a bit of a gap between maybe interest into Chinese stocks versus actual portfolio allocation right now? I think
the biggest gap that we've seen is global investors rather than investors in region. Investors in region are in. Global investors, for different reasons, have been a little slower to come back to this story. But they're now looking at this for a couple of obvious reasons. One, de-dollarization. They're looking for investment opportunities away from the dollar block. So, ergo, why we're here. Two, valuations. P's, stock valuations in China look still despite the rally, still look very, very good compared to the global valuations. And the last one is non-correlation. Although Chinese assets are moving with global stock markets in recent months, the last 24 months, they've been a non-correlated asset. If you've got a global portfolio and you don't have non-correlated assets in it, you're at risk of underperforming. So I think we see that foreign interest come back.
Before we go, can you tell us a little more about, you said maybe hiring-wise, where are you looking to hire in Asia in particular? I mean, where do you see the potential to really make an impact in the region?
Yeah, so we've got a lot of emphasis on building out our equity platform. And so you'll see us add incrementally into our equity platform in this region, including onshore China, Hong Kong, Singapore. It's a big part of the BNP Paribas story. Our sales team needs to grow because look how many clients come to see us. So we need to find ways to talk to them. And so we're generally adding to our sales force across the region, across all assets. But how
many jobs can you tell us, or anything that?
It's hard to calibrate that, to be honest. I'm not trying to be evasive. It's just hard to calibrate it. But you'll see us in positive territory, hiring in the region for the foreseeable future.
Brian, it's great to have you. Thanks so much for kicking off our coverage here at the BNP Paribas Global Markets Conference there. Brian McCappin, APAC Deputy Head of Global Markets at BNP Paribas. And we'll also be talking to a whole plethora of guests here this morning. Henderson Land CFO. He's going to be joining us here on expectations for the second half of this year, along with his insights on the state of Hong Kong's property market. Andrew Fung is going to be joining us this hour as well. Belle.
Yeah, Yvonne, really great interview there, and of course a lot more coming up. We are just getting into the market open here this morning because we will be having that big focus. I mean, the parade, of course, is ongoing. We've just seen images of President Xi going along in his motorcade to inspect the troops, hearing reports as well that he's calling out to the soldiers, calling them comrades, of course. And also you're seeing that post there from President Trump. Just to give you some more context on that, yes, he did wish President Xi a great and lasting day of celebration, but he also called out Vladimir Putin, Kim Jong-un, and told them that they're conspiring against the United States of America. So that is actually the full post and the full context of President Trump's post on his social media channels. But let's take a look at what's happening with the markets this morning, because we've just got the mainland bourses coming online. And so far in the session today, we're actually expecting to see some upside as we get into the trading day. You can see here a lot of green really across the board. In terms of the things that we're watching, I mean, the military parade may not be such a big one for trading activity, but we're certainly continuing to monitor southbound flows. We saw more moves into Alibaba, for instance, in the session yesterday. What else we're tracking is this snowball derivative story, but just these signals that we're starting to see that investors, particularly wealthier investors, are prepared to take on riskier bets in the market there. You can see as well that focus on metals, because you're seeing the likes of crude, iron ore and copper all rising more than 1% at the start of the day. But let's take a look as well what's happening in Hong Kong today, because you are again seeing optimism here across the board. You've got the Hang Seng Tech, for instance, nearly 1% higher today, but you are seeing Alibaba, Tencent building into another straight day of gains. Big focus, of course, on what's happening in the semiconductor space, because overnight, for instance, you had the US repealing TSMC's ability to send chip-making equipment to its site in Nanjing. That's not seen as having too much of a bearing on TSMC, the company itself. Really had more of an impact on Samsung, SK Hynix, that have more operations in mainland China, but still TSMC has been a little bit under pressure, and you're seeing those local chip manufacturers, the likes of SMIC, for instance, Huawei, a bit in the green. What else we're taking a look at is what's happening with robotic stocks today, given that you've got Unitree, which is really regarded as, if not the leader, one of a leader in the China humanoids robot space, but they posted on X overnight saying that they are looking ahead to a mainland listing. They're expecting to submit their filing as soon as next month. No details yet on which bourse they're choosing in particular for that. What else we're seeing is the robotic stocks, given you've got this report out from JP Morgan, and they have raised their price targets for a range of Chinese factory automation robotics names under their coverage. They're really seeing improved sector outlook, but also accelerating innovation that we see from these companies as well. EV space, because we're still continuing to track earnings this morning, but NIO, we are seeing that stock in the green today. It did actually report a second quarter loss, but it narrowed from the previous quarter, and its vehicle gross margin also improved. So maybe starting to see some scale benefits and more of a favourable product mix, and that helped to offset, of course, the significant promotions or discounts that we've seen across the space, or the EV space, auto space in China. Well, let's take a look as well at shares of Chinese fighter jet makers, robotics companies and other defence-related firms that are in the spotlight. That's as the nation holds a military parade, as we've been saying, in Beijing this morning. So for more what investors are focusing on, let's get to our Asia equities reporter, Winnie Xu, joining us. So, Winnie, I mean, yes, it's that big focus on China's military prowess, its self-reliancy as well. What are you expecting in terms of trading activity today?
Yeah, so usually, as we saw in 2015 as well, leading up to the parade, actually there is a lot of excitement, and usually the stocks will be going up. But afterwards, after this parade, usually we might see a bit of a correction, a bit of kind of like a profit taking, because of how catalysts have been priced in already. So that might be the trend that we'll be seeing in the next few sessions. However, today the sentiment is still pretty strong, because we're expecting to see what kind of new equipment upgrades, what kind of new technologies are going to be rolled out. So a couple of sectors that people are really focusing on, for example, the jets, right? We saw that being highlighted during the India-Pakistan conflict. So that stock actually was up about 50% so far this year. And when you look at the broader sector, CSI Defense Index, up 22%, outperforming that overall index of about 14%. So people are really very excited about what's going to be happening in these different areas. And also other shares that we'll be watching are the areas, for example, the drones, the missiles, and also the armor manufacturers. So all linked to showing kind of the military technologies around these areas. And another key part that we'll be looking at is the artificial intelligence. So if companies are able to kind of simulate battles, for example, and also if robotics are also going to come into play.
Mm-hmm. Yeah, and actually robotics, of course, big focus. A few different headlines. You've got the Unitree listing. You've got Tesla really doubling down on its Optimus as well. And then you've got those upgrades from JP Morgan. What about this other story? Because this one's very well read this morning about China's rich returning to risky snowball derivatives. I mean, we've seen this before. So last time there was a lot of concern. What's happening right now?
Yeah, I think this is actually, like you said, a very exciting story here because it's showing that sentiment is really coming back. And that, first of all, when we take a step back, why have these kind of rich investors coming into the derivatives is because of the lack of alternatives. The property market is not doing great, and also the low interest rate. So this snowball derivative became kind of like an attractive option here. But we really needed that rally to be the prerequisite for this derivative to look even more attractive, right? So because of a rally, we saw some of these derivatives kind of into the knockout, got into the knockout, and that handed investors, for example, 18% of returns if they invested in this CSI 1000 related products. So they are actually using that money further to invest in more snowball derivatives, and that's what we're seeing right now. So overall, it's showing that the risk sentiment is really coming back up, and that investors are willing to not just invest in the cash equities, but also leveraging up. And we saw that with that record of margin trading that we saw just recently, right? So it's really showing that the momentum is here, and that's why we're expecting that this liquidity-driven rally still has a bit more upside to come.
Winnie, thanks very much for joining us this morning. That was our Asia equities reporter, Winnie Xu, there. If we really mark what investors are going to be watching for as this military parade continues in Beijing this morning, you can see these live shots here, that big focus on the weaponry and the kinds of different devices, military devices that are going to be on display across the day. But we'll have plenty more ahead. This is Bloomberg.
Since the founding of the People's Republic of China in 1949, the PLA has also undertaken the tasks of national defense and socialist construction, while transforming itself into a more revolutionary and And we are continuing our coverage at the BNP Paribas Global Markets APAC Conference here. And joining me next exclusively is Andrew Fung, CFO of Henderson Land, a leading property developer here in the city. Andrew, it's a pleasure to have you on the show.
Good morning.
It's busy. We hear,
Yes.
Conferences are coming back into town. You have IPO markets that have been on a tear. Turnover in this equity market has been also just so robust. What are you seeing on the ground right now in terms of sentiment?
I think the sentiment has improved quite a lot this year. You see the conference here, and there's a lot of international conference for the first half of this year. And while this hotel is occupancy rate is coming back to pre-COVID period, so the atmosphere is good. I think compared to the overall retail, the IFC mall, for example, is 3% up.
Yeah.
In the first half, although the overall picture of shopping arcades are still pretty challenging. I think is the market average is -3% in the first half.
Okay.
Yeah.
So you said IFC is a bit of an exception. You said it's a bit special. But what does it tell you about the office market recovery? You obviously have two new projects that have been just laid out, whether it's the Henderson, which is, I believe, 80% leased.
Yes.
You have tenants like Point 72 that have joined. Just across the street, you have the new waterfront site, 3 projects as well. And Jane Street just took up, 70% of the office space there. Are we likely to see the beginnings of the commercial office market coming back?
is yes or no. I think first, because in the Central, there have been very few new sites for many years. So these new buildings actually are offering these new tenants tailor-made designs. They come in before it's completed, so we can build whatever they want. So that is one point that the Central, the new buildings are doing quite well. But in general, I think commercial real estates are still really challenging. There's still oversupply in most of the second-tier CBDs. So let's see. I'm not that. I'm pretty neutral on commercial real estate.
So you're not seeing a rush of tenants to fill those vacancies for the rest of the year or even 2026?
Well, I would say we see actually hedge funds or some alternate funds are coming back to Hong Kong. You see in the Henderson, most of the occupancy are funds. There's no banks there. Of course, we have Christie there too. So the tenant mix has been changing. Not to say banks are not interested in Hong Kong, but those banks who should have been in Hong Kong are already in Hong Kong. But we see a sign coming back from the alternate funds, not the traditional long-only funds.
Okay. And is it mostly international funds, or are you talking more China? I mean, what's sort of the mix now in terms of tenants now?
I would say the new tenants, most of them are international funds. Yeah. Maybe because there's a late catch-up of the emerging market, stock market, and of course IPO is doing well, and we do see some first-tier capital market lawyers coming back too. We have some law firms in the Henderson.
Is it likely to stem sort of this fall in rents that we're seeing in the Central District?
Yes, I think so. Let's see. But actually, because there's only 3 new buildings in the Central, so I think I cannot say it's too representative. It's quite unique at the moment because most of the buildings are maybe 20 years old. So that's the difference, I think.
We were talking in the break that you're a bit more positive when it comes to the residential side of this property market. Why? And how so?
Okay, for residential, I think we are seeing the bottoming out of prices. And for this year, demand is coming back with these new migration laws. And if I look at some statistics, you'll probably see these new tenants are coming back. They probably compose 30 to 40% of new home buyers. Those we look at names with different translation of their phonetics compared to Hong Kong surnames.
Are they mostly from the mainland then?
I would say so, but also because there's a coming back of expatriates, so you see actually rental pop up, residential rental pop up. So there's some investor return to the high end of the residential investment market. And also we other than the mainland expatriates, we also see some foreign expatriates coming back.
We have a government policy address that's coming up this month as well. There are expectations of maybe some sort of stimulus coming to the property market. In particular, there's discussions about the easing to support mainlanders to buy residential properties here. It's this so-called Property Connect.
Yes.
In some ways, and it's not a closed-loop sort of system-like mechanism. What have you heard so far? And if we see something like this in place, do you think this would be enough to turn around the residential property market?
We do not know more than you know, but of course, there's if you look at analyst reports and so on, there's expectation. But overall, we also are expecting some tax relief for small unit buyers too. So here or there should be some good news. But the Property Connect if it happens, it's still to look at what kind of quota. Of course, Stocks Connect has a quota. And so other than the measures, the quota, and who is eligible and what is the lump sum they can transmit out to Hong Kong is also important. So there's a lot of talking, but it's still highly uncertain.
Do you think this property market will be increasingly dependent on mainland buyers then to support it?
I think so. Even looking at today, as I just mentioned, 30 to 40% of new buyers, the translation of their names show that they are probably newcomers.
How does that change the landscape of this market then?
I would say from my own personal reading is they prefer new homes. Actually, in Hong Kong, the buildings are quite different between buildings built after 2020, after the COVID, because now most of the new homes have work from home features. So new buyers are not big buyers in the secondary market. So I think they actually are more new force in the new homes rather than the secondary market.
I got to ask you about HIBOR. We've seen fluctuations.
Yes.
Now we're back above 3%, but certainly it was low for some time. The Fed is about to be resuming its rate cut cycle as well.
Yeah.
How do these fluctuations in HIBOR impact your finances?
Oh, okay. Actually, for the first half already, we show that where we have 1% saving of interest expense compared to 2024. But of course, the second half is more optimistic because we have enjoyed very low rates between May to July, though it was too short, but it's still okay. And we have been reluctant. We caught the right time. We're the first developer coming back to the convertible market, and I got 8 billion Hong Kong dollar at 0.5% for 3 to 5 years. Yeah. So in terms of interest saving, I think we probably show some good gain this year.
Yeah, as you mentioned, a very successful convertible bond issuance there. I'm just wondering then, should we expect similar moves like that in the future for Henderson?
As a financier and ex-banker, I would say other developers probably will look at this very seriously, and they would try to issue. We really market-driven. Of course, interest rate come up quite a lot, maybe 0.5% compared to the time I issue, but it's still very attractive for developers.
Andrew, we got to leave it there, but thank you so much for joining us. Andrew Fung, Henderson Land CFO, joining us here. Bring it back to you later on in the show as well. We'll be speaking with Hengan International Group as well. This is about the price war in China's consumer and hygiene product industry. So certainly a lot to talk about the consumption story in China and what they're seeing in terms of price wars, anti-involution as well, and of course, the silver economy. Martin Lee joins us coming up in the next hour. This is Bloomberg.
We have some breaking news this morning from Thailand, where we've been awaiting the decision from Thailand's largest political party. This is the People's Party, and we're awaiting a decision on who they would be backing as Thailand's next prime minister, or the person to back as the new leader of the country. We have got an announcement from the People's Party that they're backing Anutin Charnvirakul. He is perhaps poised to lead the next government. He is a conservative politician, and he's someone as well that's pledged to call elections within months, of course, to try and end this political uncertainty caused by the sacking of Prime Minister Paetongtarn Shinawatra. Anutin's father, he's someone who briefly served as the caretaker leader in 2008, but he had said as late as Friday of last week that he had the support of enough lawmakers to become Prime Minister. This is a decision, of course, we just got from Thailand's largest political party in the last few minutes here, but that is there. You can see the Thai baht fairly steady right now, and we haven't seen too much reaction. The SET, of course, the benchmark opening in another hour. hour or so. But some other headlines that we're tracking today. The Fed Governor, Lisa Cook's lawyer, says President Trump's move to oust her is based only on cut-and-paste claims of mortgage fraud in social media posts. In a series of court filings, Cook's attorney argued Trump lacked valid grounds to fire Cook for cause. He also said social media posts by Federal Housing Finance Agency Director Bill Pulte and a criminal referral to the DOJ didn't give Cook a chance to respond before she was fired. Treasury Secretary Scott Bessent is reportedly planning to start interviews on Friday for a successor to Jerome Powell. That's according to a Wall Street Journal report, which says there are 11 contenders, including Fed Governors Chris Waller and Michelle Bowman. Following the interviews, Bessent plans to recommend a final list of candidates to President Trump. Alphabet shares surged after the bell following a US judge's ruling that Google won't have to sell Chrome but must share some search data with rivals. The judge also banned Google from exclusive search deals but allowed it to continue making payments to third parties. Google's flagged privacy concerns over the antitrust ruling and says it does not monopolize the online search sector. Taking a look at markets this morning as we have China's military parade just getting underway this morning. Defense stocks, we're actually seeing these declining across the board here this morning, but you do want to put it in the context of the big moves we've seen this morning because a gauge, for instance, from Goldman Sachs that tracks the sector broadly has risen nearly 40% this year. But today we are seeing these under pressure as we actually see footage now of China also showcasing its different weapons for land, sea and air use. So that is what we see there for defense stocks. But let's take a look also broadly across the Asian markets or Chinese markets this morning, because we do see the CSI 300 and the Hang Seng managing to stay in the green today. Of course, we can expect, we were just speaking with Winnie Xu before, but generally around major events like this, we wouldn't expect too much downside pressure. If anything, we'll continue to see gains and perhaps a slight correction as in a few days from now. But in terms of the PMI data, we just had that from Rating Dog coming out for services, also composite readings here. You can see those at the bottom of the screen, but largely sort of in track with what we saw in the month prior. And also keeping an eye on what's happening with yields this morning, given we've seen a lot of moves at the end of the curve. The Treasury 30-year, for instance, tracking near that 5% mark, but concerns around fiscal deficit, the health of that, and the discipline of governments as well to rein in their spending worldwide. More ahead. This is Bloomberg.
Today, humanity again has to choose between peace and war, dialogue and confrontation, win-win cooperation and zero-sum game. The Chinese people firmly stand on the right side of history and the progress of human civilization. We will remain committed to the path of peaceful development and join hands with all peoples around the world in building a community with a shared future for humanity.
That was the Chinese President Xi Jinping speaking earlier there before signaling the start of a military parade that marks the end, or 80 years since the end of World War II. But welcome back to the China Show this morning and taking a look at the CSI 300. Half an hour into the session this morning, we've seen it pulling off the sort of highs of the day, but very muted trading in either direction. We have been looking, of course, at the different sectors that are very much in focus today. As you can see there on the left-hand side, the military parade that's ongoing in Taiwan and this showcase that we're seeing of China's military modernization rather this morning and the capabilities that they're continuing to expand, not just for land rather, but also for the sea and the air. So perhaps closing the gap with the US, the most formidable military power in the world. But that is what we take a look there for the CSI 300. The big focus has been on defense stocks, for instance, robotics companies, other defense-related firms as well today. But let's take a look what we see across across the board for China benchmarks today, because actually we're seeing better performance in 8 shares instead. We've got the Hang Seng, for instance, rising 0.5%, and some bullishness continuing to go into tech stocks in particular. You can see the tech gauge there, again, managing to hang on in the green territory as well. Commodities also that big focus, because we do see the likes of Shanghai crude, for instance, iron ore as well, posting some gains as we start the day. But Asia ex-China, I mean, it's also sort of a similar story in the session today. We're seeing some sort of muted moves really across the board. A big focus really on what we're seeing in the bond space, in particular at the long end of the curve. Concerns around fiscal health, Fed independence, certainly playing into that. And so we have seen really huge moves in yields higher. The 5-year yield, for instance, very close to that 5% mark, and something that a lot of investors are really paying very close attention to. As you see gold, for instance, another big sort of beneficiary out of that, expectations around Fed easing, but also questions around the Fed and fiscal health as well.
Yep, and it really started in Europe, and it has gone a bit global here right now. And of course, we're watching very closely that 30-year yield, whether it does approach that 5% level as well, and what sort of message that sends to markets. Or is it going to send to more wobbles in the equity market and the like? But moving along now and getting back to our top story with this military parade, right? You mentioned about the defense stocks, right? They've been up double digits there in the last up-and-coming few weeks as well, leading up to this big event in the political calendar as well. We're seeing a bit of a sell-off here today, perhaps some profit-taking, but certainly we have seen glimpses of some of the new hardware in the parade so far. Let's cross over to Stephen Engel in Beijing, our chief North Asia correspondent, who is joining us there from Tiananmen Square, on what you've seen so far on the ground, Steve.
Well, I'm seeing the military hardware parade past us right now. The Rocket Force parade is passing our section here in the North Stand right now. We're seeing certain ICBM rocket launchers initially. Now smaller cruise missiles are coming by. One thing that we military observers, have seen when Xi Jinping rode down Chang'an right here, addressing the troops, they could see a number of new
Steve, I think we're just having a few issues with the connection there. That was our chief North Asia correspondent, Stephen Engel, on the ground for us in Beijing, as this military parade gets underway this morning. But you can see here these images of China really showcasing the strength in its military modernization. We've seen various weapons here being shown for the crowds, and really a show of force for China on the global stage. And you've already seen that initial reaction from President Trump this morning, for instance. Yes, wishing President Xi a good day, but also referencing other world leaders in attendance, notably Vladimir Putin, Kim Jong-un, and also accusing them of conspiring against the US. But let's bring in our guest this morning. This is Zhao, Senior Fellow of Institute of World Economics and Politics at the Chinese Academy of Social Science, joining us now from Beijing this morning. And Dr. Zhao, thanks very much for joining us. Let's start with this military parade, of course, the types of weapons that are being showcased. What point do you think China is trying to make to the world here?
Well, first of all, thank you for having me. I think there are a number of points that China wanted to express. Number one, China is showcasing all this new military hardware, showing that China is at the forefront of the military revolution that is going on right now, particularly after the outbreak of the Ukraine-Russian war. And secondly, China is showing that China has the ability to defend its interest, not only near China, but also globally, because you see all these long-range missiles that are capable of reaching the far end of the world. And thirdly, I think it's very important, there are international guests present at the Tiananmen Square. All this hardware is trying to give them the confidence that China can back up our friends around the world.
And so, I mean, are there any weapons in particular that stand out to you? Because we do see, for instance, China is making advancements perhaps in land capabilities, but they are behind in other areas. Naval power, for instance, is one that stands out.
Yeah, first of all, there is general upgrade from 2019 military parade because you can see all the numbers are upgraded to B or C level. That means not only anti-ship missiles, cruisers, and also air defense missiles, but also intercontinental missiles that are all upgraded. One of the things that international media right now is focused on is Dongfeng or DF-61, because last time we saw is Dongfeng 41, and then in 2020, there's Dongfeng 51. This time around, I think 61 must be another upgrade that probably has a longer range because 41 has the range of over 14,000 kilometers. And also China tested one of those missiles, I think, intercontinental missiles last year. So this is very strategic weapon that has a strategic deterrence and also other aerial denial messages going out. And secondly, I think one of the important things that might be missing is the general upgrade of the cyber security and also unmanned vehicles that is going through Tiananmen Square right now, because many of those weapons has shown big capabilities in the battleground, and also China is trying to keep up with the latest trend on the battleground.
What about the world leaders that are in attendance here today? I mean, of course, perhaps the most notable, it's not just Vladimir Putin, but also Kim Jong-un. What sort of message as well is that sending, do you think?
First of all, this military parade's purpose from the official position, of course, is to remember China's sacrifice during World War II and also trying to show that China will keep on the road of peace on its rise. However, if you look at the guests that are attending this particular event, it shows that there are countries that are resisting the U.S. bullying, quoting President Xi's word from the Shanghai Cooperation Organization just now. So it shows that there are many countries right now is under the pressure from the United States, and the show of unity on this particular event means that China will show support of those countries that are under illegal pressures or from the United States or from the West, and will continue to champion a new global or international order of global governance that will be fairer and more inclusive in the future.
Dr. Zhao, I have to wonder what we saw this week is not just the pageantry we're seeing in this military parade. It's the limousine diplomacy and what we're seeing from the SCO as well, with Modi, Putin, Kim Jong-un all in attendance in China this week. Can we call this some sort of strategic reset in some ways, or do you think this is more of a tactical sort of move that we're seeing here to counter, of course, what we've been seeing with the U.S. world order?
I don't think this is tactical. This is strategic, and this is global. We've seen a global rearrange of orders in the past, almost the past decade. And from a president's speech, we heard he saying that the world is at the crossroad, and there's a question of war and peace, and there's still danger around the world that there will be more conflict coming. So I think at this particular moment, China is not only calling for a more reformed international order, but also trying to move forward with this international order in partner with all the major global South countries, including like India and many other BRIC countries. And at this particular moment, to have President Putin on the left-hand side and also Kim Jong-un on the right is also a remembrance of history, because in World War II, China and the Soviet Union and Korean fighters are all against the Japanese imperialism. So there's a historical connotation as well.
Dr. Zhao, one of the most interesting responses so far this morning has been from President Trump, who was on his own social media channel accusing essentially President Xi, Putin, also Kim Jong-un of conspiring against the US. What do you make of that reaction that we had from him?
Actually, I would like to see him at the Tiananmen Square right now. I think China probably extended the invitation. But unfortunately, his meeting has other arrangements able to come. But China and the United States are partners in World War II against Japanese imperialism. It's very important to remember that history and very important to look forward to establish principles between the two countries. So when President Trump is writing those Twitter or those messaging, trying to show some sarcasm, it's not actually showing American strength. It's showing that he is disappointed or isolated or unhappy about the situation. But no matter what his opinion is, the result is that at this moment, his actions is actually having a global reaction. And now we're seeing it at this particular moment in Tiananmen Square.
Dr. Zhao, there's a lot of talk of this pipeline deal that was signed or at least announced between China and Russia. And it certainly raised a lot of questions as well, because China has been quite reluctant to kind of increase its dependence on Russian energy for some time. What do you think the rationale is behind that here, given especially what we're seeing, what India is facing with the U.S. and tariffs now, too, due to their reliance on Russian oil?
Well, they're twofold. One is that China and Russia has been pursuing this deal for many years. And at this particular moment, I think the time is right. The opportunity is good for the two countries to finally reaching this final deal. And secondly, of course, when President Trump was pressuring India, and particularly using tariff as a weapon against India, it increased the urgency of BRIC countries to cooperate on the energy front. You can see that from the Shanghai Cooperation Organization statements. And at this point, when China increased its cooperation with Russia, sending a very clear message to the world that all these countries is not going to change its behavior under pressure. And I think the world needs to move forward with many of the current issues, particularly how to reach peace in Russia-Ukraine, instead of just using unilateral tools to fight against, to pressure individual countries.
Yeah, I guess so. That's obviously the big aim is to bring peace. But in the meantime, I mean, as you said, we do see an environment of rising geopolitical tensions, and the risks of war are always heightening. So the big unknown for China, really, in particular, is its ability to fight or win a major conflict, and that does not just require new weapons, but it also requires the ability of the different military departments to work together, and also battle fighting experience, which of course China hasn't been engaged in live combat for decades. So what do you think we get today in terms of any signals of progress on that front, the capabilities and also the strategy front as well?
Well, compare to a decade ago, 2015, President Xi declared that China will cut 300,000 personnel from its military and continue to strive for military modernization. And today, what we saw is not just individual military hardware, but a very comprehensive fighting capability and a comprehensive system. Including surveillance, intelligence, command, and control systems. So the showcasing of this individual hardware can combine into a complete system that show China's adversaries that China has the ability not only stopping aggression on land, but also in the sea, in the air, in the cyberspace, and in many other fighting spaces. So this is very much a modernized Chinese military, and it's not only playing catch-up, but now in many cases are in the lead, particularly in the unmanned vehicle area. So if you look at the parade, there's not only UAVs, area vehicle, but also submarines, unmanned submarines that are showcased here. So if you combine the missiles, the very advanced air defense system, including laser systems, and combined with the cyber and air systems, you can see that China has a complete defense system instead of, compared to decades ago, China has only very limited defense capability on limited areas. So now I think the next step is very important because China and the U.S. now in a competition for the next generation technology, particularly at the artificial intelligence. So this particular parade does not show how artificial intelligence sort of woven into the next generation of military warfighting. However, I think that both countries are having a severe competition in these areas.
Hi, really great to have you with us this morning. That was Zhao there, Senior Fellow of Institute of World Economics and Politics at the Chinese Academy of Social Sciences. And just as we've been speaking here, I mean, keeping a very close watch on defence stocks this morning because we have actually seen them under pressure. I mean, perhaps a little bit of profit-taking. Investors have also been recently flagging concerns around the visibility of orders because, of course, we have seen a number of countries signalling their intention to buy Chinese military equipment, but it's actually unclear right now how many of those orders have been placed. But this military parade, a big opportunity for China to showcase its military prowess to the world. Still ahead on the China show, we're also going to be looking at China's consumer sector with fresh tea maker Meng amid an intense price war in the sector as well. We'll have more ahead. This is Bloomberg. You're watching the China show and taking a look at what's happening in the bond space this morning. It's really that bigger focus we see at the longer end of the curve. Yes, you're sort of seeing, I mean, some moves higher here, particularly in Australia, of course, and Japan 10-year yield. But it has been that big focus on the US 30-year yield and its counterparts at this end of the curve because we're continuing to track it heading back close to that 5% mark. Lots of concerns around fiscal health and the outlook for government spending as well. Fed independence playing into the picture. But let's get more with our MI strategist, Mark Cranfield, who joins us from Singapore this morning. And Mark, I mean, we came into September and we knew that long-dated bonds could maybe be facing not such a great month, just looking back on a historical basis. But it seems sort of like it's been supercharged, these fears, just even in the last 24 hours.
Yes, I mean, you've got a number of things coming back together here. So trading desks are now more fully staffed. There are a lot of vacations, obviously, during the August period. So people have come back. It's a fresh month. They've got less risk exposure than they would have cut down quite a bit probably during August. And they've got fresher books here. They can attack the really big themes which they see going on around the world. And what's developing here is that you increasingly hear governments around the world, they want to spend more money. Fiscal deficits are likely to worsen, and investors read that as meaning there's going to be more long bond issues wherever you are in the G10 space. So even like today, we had the Australian GDP data, only slightly higher than expectations, and yet bond investors are so cautious about any negative reading at all in the news that they're pushing Australian yields higher. In turn, we're seeing it across other markets as well. So it's just fueling on one thing after another. And it's particularly concerning because it's happening from the 10-year sector and longer. So instead of the curve steepening, say, between 2 and 10 years, we're seeing steepening between 10s, 20s, 30s, and 40-year parts of the curve. And that's much harder to rein in, particularly when you've got companies around the world issuing huge amounts of corporate debt. This week has already been one of the busiest weeks of the year for issuing new bonds. And investors clearly prefer what they see, the metrics that they see in the corporate space. They're more reassured that those companies have it under control and governments do not. So it's even more difficult to sell government bonds when people prefer to put their money into slightly higher yielding corporate bonds, which they feel are actually at the moment offering them a safer place to be than the government. How this ends really is up to governments to show that they're going to rein in their deficits, and there's no sign of that for the time being, and that's why traders are so negative, especially on the very long end of the curve.
And I'm wondering as well, I mean, we came into the day with this Wall Street Journal report about Besant starting Fed chair interviews as soon as this Friday. I mean, how does that sort of also play into question marks, not just about Fed independence, but the direction of rates as well?
Well, one of the things that we saw earlier in the year when Jerome Powell himself was coming under a lot of pressure from President Trump and other people about his position, we saw it particularly being taken out in the 30-year US Treasury yield, went up to 5%, since came down a bit, and it's traveling back in that direction again. In the meantime, the narrative seems to have changed. It's not just about the Fed chairman, it's about replacing as many people as possible on the Federal Reserve, and investors don't like it. They don't like the idea that the hard-won independence of the central bank, the transparency around policy making is being threatened, and that's what's hurting the long end of the US Treasury curve.
Mark, really great to have you this morning. That was our MLIve strategist, Mark Cranfield, there, and we'll have plenty more ahead. This is Bloomberg. Some of the headlines that we're tracking this morning: in Jane Street's $10.1 billion haul in second quarter net trading revenue has beat out all of the biggest banks to set a Wall Street record. Sources tell Bloomberg the sales figure more than doubled from a year earlier, also pushing Jane Street's first half totals to a record. Trading volumes have been elevated since President Trump announced a raft of global tariffs as investors rush to reposition their portfolios. Bloomberg has learned Tesla's Indian market debut has underwhelmed so far, with orders for about 600 cars since mid-July. Sources say those numbers are short of Tesla's own expectations. The EV maker now plans to ship only 350 to 500 cars to India this year. Tesla is struggling with high import tariffs, which have priced even its entry-level model well out of reach of most Indian consumers. Taking a look at Chinese defence stocks this morning, because we have seen these pulling back across the board, even as China holds its military parade in Beijing this morning. We've just seen a flyover, for instance, but all of its military equipment, its upgrades being focused or showcased. Lots of questions, though, around the order pipeline for some of these makers as they start to report their earnings. But more ahead. This is Bloomberg.
Continue to watch, of course. Live pictures out of Beijing here this morning where that military parade is underway. That you see it, the thousands of balloons in the sky here right now. I believe there's tens of thousands or even up to 80,000, according to our T8 Live blog, of doves that are waiting to be released at the end of this parade. And certainly it's been one of fanfare, of pageantry, of what we've seen so far of China's military might and weaponry. We have seen already things like the JL-3, an intercontinental range submarine, launch ballistic missile, which is of quite of importance there, but certainly does show that China has all three legs of a nuclear triad, whether it's air, ground, and sea-launched nuclear missiles. So that certainly is the symbol of power, as a lot of military experts have highlighted as well, what they were looking out for in this parade here today. And of course, equity markets are slightly seeing a bit of a pullback here. Maybe it's the wobbles that we're seeing in the bond market, but certainly seeing a little bit more red on the board here today, Belle.
Yeah, that's right. I mean, we've seen downward pressure really for Asia-Pacific stocks, but pretty muted moves as well. Most of the action is in the bond space, and we've been continuing to watch that global bond rally, but we're seeing treasuries, for instance, the 30-year touching or near that 5% mark. What's been really notable as well, not just at the military parade, it's been the reaction that's also come from President Trump and what he's posted on his True Social platform this morning, really taking aim at President Xi, but also Vladimir Putin, Kim Jong-un, and accusing the three of them of conspiring against the United States of America. So you can see here this post in full. He did wish President Xi a good day, but certainly taking aim. And it's just a reminder of the lingering tensions between the two sides and the purpose as well of this military parade for China, which is to showcase the modernization of its military. And as you said, Yvonne, not just the land capabilities, but also what it can do in the sea and in the air. But let's, of course, head back. It's a very busy events day for us, and we're live from the Goldman Sachs Asia Leaders Conference in Hong Kong. Bloomberg's Avril Hong is standing by with our next guest. Avril.
Yeah, Belle, just hearing you there talking about the markets, it's interesting the backdrop of tariffs. We're seeing some of these macroeconomic risks for China. We want to talk about some of the consumption-related names, particularly in the tea sector. Joining us now exclusively is Grooming CFO George Meng. So really good to see you, George. First off, we're seeing this as a sector that is being shaped by price wars, subsidy wars, and some of these new consumption trends. Right. What are you seeing among the food delivery giants, their pricing competition? How is that impacting sales volumes for your franchisees?
Yeah, so initially I think it really started in April, like the second half of April, but then it really went into full-blown kind of war in June and then lasting into July and August. I think, this is something that we cannot control, and they're fighting for market share. Of course, we don't want to see all this kind of irrational price wars because it drives people into online channels, and some people just, they don't really need this product. They probably won't be able to afford that. But because of this exceptionally low price or even free for them to take that, so a lot of irrational demand. I think in the long run, it may not stay. So, and then in terms of, if you look at from the franchisees' perspective, a lot of people, their margin are hurt because they also need to provide all these subsidies. Although the volume is up, but the margin is down. So if you consider all these two countering factors, some of these franchisees, they're complaining that although the volumes are up a lot, but they also need to hire more people to do this, and it's a tiresome thing, but then they're not making money.
I guess at the end of the day, who's really benefiting is the consumers because of cheaper tea. But you talk about the franchisees, the pressures that they face, right?
Yeah.
Could you put some numbers to it in terms of how their bottom line is likely to be affected?
Yeah, so if you think about the P&L of the franchisees, not the listed company of the headquarters, I think we just don't have the numbers from other brands. But for our own brands, I think the volume is up, and then the margin is down slightly. So today, the volume, the increased volume will still be more than offset the slightly decreased margin. But then you just mentioned that the consumers are winning. It's actually, a lot of people say that more consumers are getting diabetes, something like that. So they're also like a victim to this war.
Right.
Yeah.
What some of the assumptions are you making in your projections for the year ahead as these subsidy wars continue?
Yeah, so a lot of people say this will subside, very quickly. But our assumption is we're not gonna disappear anytime soon. Maybe it will come in a different manner, right? So I think in July, like every Saturday, these 2 or 3 platforms, they fight each other in a very big way. But then I think heading into August and September, these things kind of normalize. So it tends to be every Saturday big war, but then it becomes like Mondays to Sunday. You have maybe personalized discount and subsidies, so it's become more subtle. But then if you count the total amount they spend on all these competition, I think it's not gonna, decrease anytime soon.
The strategy for Grooming has primarily focused on the smaller townships and the cities. Right. You're looking to make a bigger push into the higher tier cities. How aggressively and in which cities?
Actually, our ambition, of course, is going to be everywhere in China and beyond. So yes, you're right that I think in the past and also currently our priority is still in lower tier cities, or even not really cities, is counties, towns, and townships. I think mainly because those places we have a higher competitive edge over our competitors, so those places are of higher priority to us. But then going forward, we're not going to avoid all these so-called first-tier cities or top-tier cities. In fact, we're already in Shenzhen, or we're already in Guangzhou, so 2 of the 4 first-tier cities. So we're yet to be in Shanghai and Beijing. I think probably Shanghai will be next year, and Beijing maybe.
Second half?
No, we haven't decided yet. Yeah.
And Beijing, you said?
Probably a year after that or so. So Beijing, because if you look at the expansion strategy of ours, it's not like we're going to go directly to the northeastern part of China without going through the central part of China, so or Beijing. So we're not going to just so-called airdrop to all these areas. We're going to be like a ground force, and then going from
slowly
fighting your way through China. What about abroad? I mean, you talked about Hong Kong potentially, beyond Hong Kong, where and what sort of timeline are we looking at?
Yeah, so that's, again, it's not our priority today, but we do have that in mind. So if we're going to go abroad, of course, Hong Kong will be the first stop, and it will be a test ground for us because, you know, the rent is high, the labor cost is quite high, so you do need more automation. You know, you cannot rely a lot on just hiring more people to do the manual jobs, right? And then maybe Singapore next. But I think in the long run, it's a lot of these are competitors or you know, bubble tea players in China. They like, for example, Southeast Asia, because it's closer to China, and maybe all this culture is a little bit similar. But then I think in the long run, we definitely will need to go to places like the US and Europe, but also Latin America could be a very interesting market for us.
So that's a mid to longer term view.
Yeah, that will be like 5 years out. So we do think that this, you know, tea drinking or bubble tea drinking culture is very predominant in China today. It's less so in other parts of the world. So it definitely takes time. Even in China, in mainland China, it takes, I think, 3 decades now to reach what it is today. So it takes a lot of different efforts, so a lot of different brands, not just one single brand. And I think it's definitely at least a decade-long effort to make people see that as a you know, as a lifestyle, as an everyday habit. Yeah.
You talk about as well earlier some of these new consumption trends, right? How has that been supportive for the business in terms of maybe emotional buying of tea and that drinking culture that's come up really?
Yeah, so if you think about tea drinking, it really dates back to a very long time ago. But then nowadays for young people, you know, if you do this very traditional pure tea, some people think it's just like pure coffee in China. It's the same thing, right? If you drink just black coffee, like we think the entry barrier is too high for young people to do that. So the first step, you probably just do, maybe for coffee, you do latte, you do some flavored coffee, and for tea, it's the same thing. You do bubble tea to make them, you know, more acceptable to the young people. And then over time, when they grow older, right, they will probably a lot of them will actually migrate to like less sugar, less milk, but more pure coffee or pure tea. So by the way, we are also offering coffee in our shops now. So most of our, I would say,
moving along with these consumer needs as well, and what the market is demanding. George, been really nice to chat with you. Thank you so much for sharing more about your plans for the business. We got to go, unfortunately. Thanks so much. Meng, CFO George Meng for us. Belle?
April, yeah, really great interview there, and just hearing that Meng, as you said, probably going to be opening in Shanghai next year as one of the highlights, but we'll have plenty more ahead. This is Bloomberg.
We are continuing our coverage of the BNP Paribas Global Markets at APAC conference here. And joining me now is Martin Lee, the CFO of Hengan International Group. They are one of the biggest manufacturers when it comes to hygiene products, tissues, diapers, and the like here. Martin Lee joins us here in a very loud conference here right now. But thank you so much for bearing with the noise, Martin. But obviously there's been a lot. We were just talking to Meng from the Goldman Sachs about the price wars that we're seeing in the consumer space. You guys are certainly feeling that right now when it comes to hygiene products also. How fierce has it been?
Yeah, thank you, Yvonne. I think that's, I really admit that actually over the past 2 years' time, the price competition is very fierce. But when we enter into this year, I would say about this price competition more moderate and actually more stabilized. I think really thanks about the anti-inflations and measures that implemented by the mainland China government. But also actually I think, and the second fact is about that is the bottom out. Because actually lots of the companies really need to earn money to survive in this kind of environment. And secondly, most importantly, is that the mainland China customer demand for better quality products. And demand for better quality products, demand for a higher cost of raw materials, higher cost of production. Definitely, you need to rise the ASP as well. So in the long run, I would expect that the price will going up. Yeah.
So you're calling the end to this price war in some ways.
I would expect that actually will be more long-term and more progressively.
Yeah.
Because I need to admit that right now, a lot of the platform, not only supermarket, e-commerce platform, for some social media platform, they really can buy our products. So there's a lot of the channels to doing the price competition. But what I'm saying is right now is that it's bottom out.
Yeah.
So there's still a certain level of pricing or competitions that you need to insert in this kind of products. But in the longer run, because the people demand for better quality products, the ASP will grow accordingly. Just like our result in the first half, we actually have an ASP increase as well. Yeah.
What does it mean in terms of capex, the like? I mean, obviously, I think in your earnings, you have to spend a lot of marketing, advertising, the like. Are we likely to have to spend more to defend your market share, or do you think that moving forward, things might subside a little bit more now?
I need to admit that we need to spend more money. I think in the past that we may be only spending on some advertising, very traditional advertising. But right now, we need to spend a lot of money to hire KOLs in different channels to promote our products. This is really a new normal. But what we are thinking is that we spend the money, we calculate the return. So at the end of the day, what we are digital spending will not be impact a lot of our profitability. So this is something that we need to get used to that.
Gross margins, can I expect those to contract less? Actually, can we see things look better? I mean, what are you expecting in terms of the margin impact?
I would expect that the GP margin will continuously improve because, as I mentioned earlier, we are producing a better quality, more premium products to our customers. These products will have a higher ASP and will have a higher GP margin. And this kind of higher GP margin will be able, we believe that in the long run, we'll be able to offset the expenses that we spend. So hopefully that the GP margin will improve gradually.
Consolidation, can I expect that in the face of these price wars here? Are you interested in any sort of M&A and the like here right now?
I totally correct that the market consolidation will happen. Just take tissue as for example, because for example, some market data showing that the big players, including us, only occupying 30% of the market share in mainland China tissue market. So actually there's a big room to grow in terms of market share. And we have seen this kind of trend for the big players, including us, over the past 2 years' time. So market consolidation will happen. But for ourselves, our strategy is to going organically. So we are building up additional capacity, some new capex to spending on machineries, rather than acquiring some other companies in mainland China. So organically, we will expect some gaining market share.
The government has been promoting or talking about consumption-related initiatives, right? Whether it's child subsidies or fees for partial waivers for preschool education fees and the like here. Do you think that these measures are going to do anything in terms of moving the needle on boosting consumption?
Yeah, I think that's we will, as I mentioned, mid to long run, we are very confident on that one, and we see some picking up in terms of our baby-related products. And this is actually reflecting, most importantly, is that your product is premium. So first of all, we need to produce a premium baby diaper products with a good price, and then with the consumption support subsidized from the government. I believe that this will be a long-term growth.
How do you see the competition between international brands and mainland Chinese brands evolving over time?
I would say that what I observed over the past 2 years' time, indeed, the local brands in mainland China are really picking up, and sometimes it's actually gaining market share from the international brands. I think that this is from a various angles. First, it's about the increased enhancement of the quality of the products that mainland China brands are producing. So that's one of the things that can gain the market share. Second is that the use of this kind of new media, the social media and e-commerce media, and engaging some KOL. I think mainland China brands are very good used to doing that. So I observe is that mainland China brands are actually growing up and gaining market share.
Do you have the pricing power then to compete with some of the Kimberly-Clarks and the like there?
I think that most importantly is really the quality of the products match those things. So if your quality of the products match those things, you really can have the similar pricing strategies and benchmark with these kind of international brands.
The next thing I know you're focusing on a lot of your time on is adult diapers, the whole silver economy. How big of an opportunity is that for Hengan?
I can share some market data. Right now, more than 60 years old, reaching close to 300 million population already. And I expect that this population continues to increase. So that's why, and also secondly, is that there's a better education during the COVID time to using the adult diapers. So that's why I would expect that over the next number of years, there will be an increase in the adult diapers use because of the this kind of adult diapers, elderly people using more.
I want to talk about international expansion because you are looking very much at Southeast Asia. In Malaysia, you certainly have your investment in there, and certainly started as an OEM, but now you're looking to expand a bit more. What sort of is the rationale behind going into that region now?
I think our group is taking more a prudent and step-by-step approach, especially in this kind of environment. So actually, we're starting with something that we very familiarized. In Malaysia, we acquired a plant talking about 7 years ago, and actually starting at that point of time is mainly OEM. But actually, it's a really good platform with a lot of good channels and nearby countries. So that's why we started to develop our brands in Malaysia gradually, selling in the Malaysian market, and then gradually selling to other nearby countries like Singapore, Thailand, etc. Yeah.
Martin, it's great to have you. Martin Lee, the CFO of Hengan International Group, joining us here at the BNP Paribas Global Markets APAC Conference. We got plenty more ahead. This is Bloomberg.
Well, Thailand's caretaker prime minister has moved to dissolve parliament. That comes as the country's largest political party says it will back conservative politician Anutin Chanvivakul's bid to form a government. Bloomberg anchor Haslinda Amin is in Bangkok for us today and this was sort of seen as, Anutin was sort of seen as the preferred candidate, the one most likely to emerge. But what do we know about the latest on what's happening there on the ground?
Well, Belle, we know there is an alliance at this point in time, but if you speak to people on the ground, they say this alliance could break at any time. It is a fragile alliance, so there's not much confidence that, it is really a significant step forward. Remember, as you said, Anutin has been the man at the fore. He has said time and again that he had the support that's needed. This alliance, though, came with a few strings attached, that parliament will be dissolved, that elections will be called as soon as possible, and by some calculation that may happen in the second quarter of next year. But remember, Thai politics, we've been here before many times over. It is fragile. We've seen, 3 prime ministers in 2 years. We've seen 5 sitting prime ministers being ousted by the court. Essentially, what this means is the power actually lies in the hands of the court. 6 people decide the fate of the country. Who holds power? Who doesn't? And despite this alliance, we are not certain that stability will come through.
Yeah, as you say, right, we've been here before, and certainly when you talk about political instability, these markets are certainly going to be very sensitive to what goes on the next 2 days a month. What are policymakers saying about this latest move?
Well, I think policymakers want stability so that policies can actually take place. Take, for instance, the fiscal spending. It's been so difficult to actually implement just because there's been so much political uncertainty. And that's the reason why foreign investors have been making exit from the Thai market. For greater perspective, later on, we're speaking in an exclusive interview with the BOT governor, who will give his perspective. He's the man who's been under so much pressure to actually cut rates while fighting inflation. So we get a clear picture on policy going forward.
Really great interviews coming up, just in a few minutes from now. That was our Bloomberg anchor there, Haslinda Amin in Bangkok. And also, of course, that big focus in the global debt space as well, concerns around fiscal health, the inflation outlook, Fed independence. It's certainly playing into what we're seeing in yields this morning, because we continue to see that move higher really across the board at the longer end of the curve. Very big focus there on the Treasury 30-year yield, close to that 5% mark. Now, this is happening, of course, as the other major event in China has been underway this morning, the military parade being held over the past couple of hours. It has wrapped now with the release of 80,000 doves, but defence stocks very much in focus for us, given you have seen a rapid appreciation this year. Some pullback today, perhaps some profit taking, but earnings picture, the outlook for global orders as well for these defence names in focus as well. Copper stocks, that is moving in the other direction today, because we've seen copper moving to a 5-month high. So you can see there that picture. Plus travel stocks are in focus because we've seen just around this event, China granting Russian tourists visa-free entry to China as well. So you can see there some of those names, those travel names in focus. The presence of Russian President Vladimir Putin, the presence of Kim Jong-un at this military parade has not gone unnoticed, of course, at least by President Trump. And just to end the show today with this post that he's put online in the last couple of hours as well, accusing China, Russia and North Korea of conspiring against the USA. But we'll leave you with that picture. Get more analysis ahead. You're watching The China Show.